Former Italian Prime Minister Mario Draghi has brought hope to the troubled Italian market since becoming Prime Minister in February 2021, pushing for reforms and building good relations with the European Union. That's why his sudden resignation and the victory of the extreme right is a saving point in the long list of worries about the Italian economy. The exit poll of the state television RAI shows that the bloc of conservative parties, which includes Matteo Salvini's League and Silvio Berlusconi's Forza Italia party, won enough votes to secure control over both houses of the parliament. According to RAI, the right-wing bloc will get between 227 and 257 of the 400 seats in the lower house of the parliament and between 111 and 131 seats in the 200-member Senate. If the election results are confirmed, Meloni, as the leader of the largest party in the winning alliance, will have the chance to become the first woman Prime Minister of Italy, at the head of the most right-wing government since the Second World War. This set, according to economic experts, brings new uncertainty for investors who are already worried about the rise in interest rates, the energy crisis and a potential recession. This outcome could cause doubt for the reformers who are the condition of the country to receive funds from the European Union for accelerated recovery after the pandemic.
We expect increased instability on the Italian stock market, but without extremes in the days right after the elections. Our concern is medium-term. The next government will face a difficult autumn and probable social tensions,
said Fabio Caldato, economic expert from Olympia World Management. So far, markets have been relatively optimistic about election risk as far-right leaders soften their tone during the campaign. Giorgia Meloni, who is worried about the greatest probability of becoming the future Prime Minister of Italy, advocated constructive cooperation with Brussels. The chief economic advisor of Unicredit Group, Eric F. Nielsen, is optimistic that a comprehensive reform program will be implemented at Draghi, which would be good news for the country's financial markets. However, in view of the fact that the appointment of the cabinet will most likely not happen until the end of next month, the main test of the new government will probably have to wait for some time, according to Goldman Sachs Group economist Sven Jari Sten. The appointment of ministers, especially for the finance department, will be crucial for the markets because they will have a trusted person to manage an economy that has historically been burdened with high debts. The government led by Meloni could have a more invasive influence on the economy and on state-controlled companies, as well as in relation to the procedures for the preservation of strategic funds, said Matteo Brancolini, fund manager at the Milan-based Beeper Bank, as reported by Bloomberg.